Today on Coinw, we are breaking down how to trade futures on Coinw. This tutorial is made for beginners, so I'll walk you through the platform, explain the key settings, and show you how to open and manage a futures trade from start to finish. If you want to receive a welcome bonus, I recommend you create a Coinw account with the link in the description. New users registering with our link will be eligible to receive these exclusive welcome bonuses. To start our futures tutorial on Coinw, the first thing we want to do is make sure we have deposited funds into the right account/wallet. So we're going to head to our wallets on the top and click on Assets Overview. Here we can see we have 200 USDT. And if we click on Account, we can see that our USDT is in our funding account. We want our USDT in our futures account. So we're going to click on Transfer and then transfer from funding account to futures account. We're going to transfer the full amount, so 200 USDT, and confirm. Now we can see we have our 200 USDT in the right account. If you aren't sure how to deposit crypto into Coinw, we have previously made a video on this, so I'll go ahead and leave a link to it in this video's description. The next thing we want to do is understand the trading fees on Coinw futures. So let's head back to the main page, clicking the top left Coinw icon. We can then scroll all the way down to the bottom, and under About Us, we can click on Fee Rate. Under Fees, we can click Futures, and we can see that the base trading fees for makers is 0.02% and for takers is 0.06%. Exchanges usually charge two types of trading fees, maker fees and taker fees. Maker fees apply when you place a limit order, while taker fees apply when you execute a market order. It's always good to understand trading fees before you make any trades. So we've done that. Now let's head to futures. So let's just click on the futures button and we can see the Coinw futures UI. If we want to change from light to dark, we can click on this half moon here and switch it to dark. For this tutorial, I'm just going to leave it on dark mode as I think it's a lot easier to see what I'm doing. Next, let's quickly go over a few important settings on Coinw. So let's hover over the settings tab on the top right. And first, I would recommend changing the default trading unit from contract to margin value USDT. This is best for beginners because it lets you enter your trade size based on your USDT in your futures account instead of trying to calculate it in contract value, Bitcoin, or another coin. So it's easy to understand how much margin you're using for the trade. You can also check on your notification settings, where you can turn on alerts for things like order updates, filled trades, and position warnings. Then, under Preferences, you'll see different layout options. The default layout option on Coinw is Pro Write, and it's pretty common for most centralized exchanges to have this layout. But I'll quickly show you each layout so you can choose the one that feels the easiest to use. So we have Advanced Left, Classic Layout, and Advanced Right. For this tutorial, we are going to keep it on the default, which is Pro Right, and we can just exit this. Next, I want to show you can actually customize your UI. So we see on the top right of each section, there are these little 6 dots. This lets you actually move around each section. So I can kind of change where I want things to be. If I want something smaller or bigger, let's say I want this on the left side. Anyway, I'm kind of making a mess of this dashboard, but you understand what I mean. Now, obviously, I kind of made a bit of a mess of the dashboard. So if we did want to reset the UI, we would just go back to Settings, Preferences, and click Reset to Default Layout. And we can now see we are back to the default. Now that we've chosen our layout for the UI, we next can choose the token we want to trade. For this tutorial, we are going to trade with Bitcoin, but on Coinw, you'll see a lot of different futures markets available, including other major coins like Ethereum, Solana, XRP, and other popular altcoins. For beginners, I recommend starting with larger, more liquid coins because they usually have tighter spreads, more trading volume, and cleaner price action compared to smaller coins. Right in the middle of the page, we can see something that says Funding/Countdown. The funding rate is a small fee paid between traders to keep the futures price close to the spot price. If the rate is positive, long positions pay shorts, and if it's negative, shorts pay longs. So right now the funding rate is positive, so that would mean that long positions would be paying shorts. To the right, we can see something called the countdown. The countdown shows you when the next funding payment happens. Most exchanges use 8-hour blocks. So if you're holding a position when the timer hits 0, You'll either pay or receive that funding fee depending on if the rate is negative or positive. Let's now do a quick overview of the TradingView chart. At the top, you can change the time frames. This controls how much each candle represents. A shorter time frame, like the 1 minute, can show short-term price action on that token, while longer time frames like the 4-hour or the daily can give you a bigger picture of the price trend. We're just going to keep it on the default time frame, which is the 15-minute. On the left side of the chart, we have drawing tools. Beginner traders can use tools like the horizontal line to mark support and resistance, the trend line to follow the direction of the market, and the rectangle tool to mark important price zones. On the top of the chart, you can also add indicators. Important indicators, like moving averages, help show the overall trend. RSI can show when price may be overbought or oversold, and MACD helps show the changes in momentum. In chart settings, you can customize how the chart looks, like candle colors, background, and display options. At the bottom of the chart, you'll see trading volume. This shows how much buying and selling happened during each candle. Higher volume usually means more activity behind the move. On the top right of the chart, we can see this icon here. This is the multi-chart option. Multi-chart lets you view more than one chart at the same time. This can be useful if you want to watch different coins, compare different time frames, or keep an eye on bigger trends while also looking for an entry. For example, you could have Bitcoin on one chart and Ethereum on the other. Or you can view the same token, so let's say Bitcoin on both sides, and you can view different time frames, so Bitcoin on the 15-minute on the left, and we can do maybe Bitcoin on the 4-hour on the right. Viewing the same token on different time frames can help you see the bigger trend, but also gives you an opportunity to look for short-term entries. Right beside the chart, we have something called the order book. It shows all the current buy and sell orders on the exchange. Green represents buy orders and red represents sell orders. The order book can help traders see supply and demand at different price levels while also giving you a sense of the asset's liquidity, meaning how much buying and selling interest there is at each price. To the right of the order book, we have the recent trades section. This section shows trades that are happening in real time. You can see the price, amount, and the time of each trade. This helps you quickly see where people are buying and selling right now and how active the market is. Next, we're going to go over 3 important settings for futures trading. We have margin mode, position mode, and leverage. Margin mode controls how much funds are used for the trade. For beginners, I recommend using isolated margin because only the margin you put into that specific trade is at risk. With cross margin, your full futures account balance can be used to support the position, which can be riskier if you don't fully understand it yet. So let's confirm our isolated margin. Position mode controls how Coinw handles multiple trades on the same pair. Merge combines positions in the same direction into one average entry price, while split keeps them as separate positions. For beginners, merge is usually simpler because it keeps everything cleaner and easier to track. So again, we can confirm this. And then lastly, we have leverage. Leverage lets you control a larger position with a smaller amount of margin, but the higher the leverage, the faster your profits and losses move. For beginners, it's better to use low leverage like 2x to 5x instead of jumping into high leverage like 20x or more. For this tutorial, we're going to use 3x and confirm it. All right, now we're getting closer to making our trade. We next want to go over the different order types on Coinw. First, we have a market order. A market order buys or sells instantly at the best available price. Traders use this when they want to enter or exit a trade quickly, but you'll usually pay the taker fee because you're taking liquidity from the order book. A limit order lets you choose the exact price you want to buy or sell at. Traders use this when they want to have more control over their entry. And if your order sits on the order book first, you'll usually pay the lower maker fee. You may also see something that says BBO. This can make limit orders faster and easier because it uses the current order book prices instead of making you type the price manually. Beside a limit order, we have a conditional order. A conditional order only activates once a certain trigger price is reached. Traders use this to plan entries or exits ahead of time, instead of watching the charts constantly. And lastly, we have advanced limit. An advanced limit order gives you extra execution settings. First, we have post only. Post only is used when you want your limit order to add liquidity to the order book instead of filling instantly. Traders use this to try and pay the lower maker fee. but if the order executes right away, it gets canceled automatically. Second, we have an IOC order. This stands for immediate or cancel. IOC fills what it can immediately and cancels the rest. Lastly, we have an FOK order. This stands for fill or kill. FOK only fills if the entire order can be filled right away. For beginners, I recommend sticking to market orders and basic limit orders at first. They're the easiest to understand, and once you're more comfortable, you can start learning more about advanced order types. For this tutorial, we will be using a market order because it's the simplest way to enter the trade quickly so you can easily follow along. So we are placing a 3x market long on Bitcoin with our full position size. Below the buy and sell buttons, we can see with our 3x leverage on our 200 USDT, we'll be exposed to about 600 USDT worth of Bitcoin. Now, before we make our trade, we can see there is a box that says TPNSL. Let's just click this. This stands for take profit and stop loss. These are two of the most important tools in futures trading. A take profit automatically closes your trade when the price reaches your profit target, while a stop loss automatically closes your trade if the market moves against you, helping you limit your losses. These are especially important for beginners because futures trading uses leverage, so profits and losses can move much faster. Setting a take profit and stop loss helps you plan your trade before emotions can take over. So for example, for our trade, if Bitcoin hits, let's say 130,000, I'll be pretty happy with these profits, and we will take our profits and exit our trade. And on the downside, if Bitcoin goes past 60,000, I don't have the best stomach for losses, so I just want to cut my losses and exit the trade. This is the simple way to set a take profit and stop loss. We also see advanced settings, so let's click on this. In the advanced TPSL settings, you'll see a trigger price. This is the price that activates your take profit or stop loss. After the trigger price is hit, you can choose whether the closing order is a market order or a limit order. For beginners, I recommend just sticking with market orders, especially for stop losses, because when your stop loss is triggered, you usually want to exit the trade quickly instead of waiting for a limit order to fill. You can also set your take profit and stop loss 3 different ways. By price, which is what we did before. By price change. So let's say I want to take profits if Bitcoin goes up 50%. We can see the price changes here. And lastly, by ROI. ROI percentage takes your leverage into account. So if you're using higher leverage, your ROI will move much faster. So with our 3x leverage, in my mind, if I'm up about 100%, I'll be happy with that. We can see that will take Bitcoin to about 99,000 and will be up about 200 USDT on this trade. You also have the same options for stop losses. I'm pretty happy with our original take profit and stop loss that we set. So we're just going to keep it at 130,000 and 60,000 and then confirm. So now we have our take profit and our stop loss. We have our order, our 3x Bitcoin long. So we can click long, go over our details and confirm our order. We can see that our market order was successfully filled. And on the bottom, we can see our position. Here you'll see important details like the size of your trade, your break-even price, your liquidation price, and your P&L/ROI. If you scroll to the right a little bit, there's a few other things that you can see. Under margin, if you click this plus button, here you can increase or decrease the margin in your position. Increasing margin can move your liquidation price farther away and give the trade more room, while decreasing margin removes some funds from the position, but can bring your liquidation price closer. For beginners, be careful with this. Don't add margin just to save a bad trade, and don't reduce margin unless you understand how it affects your liquidation price. On the right side, you can also manually close a trade. Clicking close gives you a few more options. You can choose how much of your position you want to close, the price you want to close it at. You can also choose a limit order or an advanced limit order. Close by market instantly closes your entire position at the current market price, and reverse closes your current trade and opens a new one in the opposite direction. To manage open orders, like our take profit and stop loss, we can just head to open orders. Here we can see our take profit and our stop loss. If we move it to the right a bit, this is where we can edit our take profit and stop loss and cancel. If we would click this button here, we can see we can change anything we like within our order. If we had multiple take profit and stop losses, we could click cancel all, or we can just cancel our order like this. Since we canceled our original take profit and stop loss orders, I'm now going to show you how to add them to an existing position. So let's head back to our positions, and under TP and SL, we can click on this button, and we can now add a new take profit and stop loss order to our existing position. So this time we're going to do it by price change. So I want to exit my trade if Bitcoin goes up 100%, and on the downside, if Bitcoin goes down more than 30%, I want to cut my losses, and we can now confirm. If we wanted to edit our take profit and stop loss, we can do so here. And if we want to close our orders, we can go back to open orders and click on cancel all. Next, I'm going to show you how to add multiple/partial take profit and stop loss orders to your existing position. So again, let's head back to positions, and under take profit and stop loss, click this button, and we are going to go to fixed amount. This option allows us to choose how much of our current position we want to include in our take profit and stop loss orders. Partial take profits let you close the trade in smaller pieces. This can be useful because you can lock in some profit early while still keeping part of the trade open in case the price keeps moving in your favor. On the other hand, multiple stop losses can be useful because they let you manage risk in smaller steps. Instead of closing the entire trade at one stop loss price, you can close part of the position early, reduce your risk, and still leave some of the trade open in case the market turns back in your favor. For this tutorial, we're going to use two separate positions to keep it simple. So for our first take profit and stop loss, I want to exit half of our position once Bitcoin hits 115,000, and on the downside, I want to cut half of my position if Bitcoin goes past, let's say, 65,000. Let's confirm these orders. For the second half of our take profit and stop loss orders, make sure again we are in fixed amount. We want to let our trade run a bit more, so let's put our second take profit at around 160,000, and on the downside, let's put our second stop loss at around 40,000. So on the upside, our trade has more room to run, and on the downside, it does have room to turn around. Again, let's choose half of our position. So if Bitcoin would go past 160,000, we would be fully out of our position. And on the downside, if Bitcoin would go down past 40,000, we would also be out of our position. We can confirm these orders. And now if we head to open orders, we can see both of our take profit and stop losses. Scrolling to the right is where we can edit them. We can cancel them individually, or also just press cancel all. Lastly, I want to show you how to add a trailing stop to your existing position. So again, under TP and SL, click on this, and then we can see there is an option beside fixed amount that says trailing stop. A trailing stop loss is a stop loss that can move with the price when the trade goes in your favor. Traders use it to help protect profits while still giving the trade room to keep running. There is usually two main parts in a trailing stop order: the activation price and the callback rate percentage. The activation price is the price where the trailing stop loss first turns on, while the callback percentage is how far price can pull back before the order closes the trade. So for example, if I were to put my activation price at around 100,000 BTC and our callback rate at about 5%, if the trade continues to move in profit past 100,000, the trailing stop can follow the price up. But if the price pulls back by our callback percentage, 5%, it will automatically close the position. This can help traders lock in gains without needing to manually watch the charts the whole time. So I'm pretty happy with this trailing stop order. I just want to confirm it now. And if we wanted to manage this order, we would just head to open orders. And here is our trailing stop order. To cancel the order, again, just press cancel all. Lastly, if we wanted to close our position, we can do so a few ways. We can either close it at the bottom on the right by using close or close by market, or under market in the order panel on the top right, we can press close our whole position, and then click close long. We can see the details and that we have a small estimated loss, and confirm the close. We can see that our market order was filled and we no longer have a position. On the bottom right, we can see we have about 198.45 USDT available. So this means after trading fees, we lost about $1.55 on this trade. And that about wraps up today's futures trading tutorial on Coinw. Hopefully this helped make the platform easier to understand and gave you a clear idea of how to place and manage a futures trade. If you want a welcome bonus when signing up to Coinw, you should create an account with the link below this video. The link will take you to this sign up page where you can see all the bonuses that you are eligible for. If you like this video, feel free to give it a thumbs up and subscribe to the channel. We also have a website at cryptowinrate.com where we have lots of crypto content and tons of educational guides for you to sift through. Thanks for watching, and I'll see you in the next Crypto Win Rate tutorial.